Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name is Patrick Dunawilla and I'll be your host. It is great to be back with you. This is the first episode of the year, so in order to kick things off with a bang, we've got Jay Woods joining us right from the New York Stock Exchange. Jay is a former floor governor of the New York Stock Exchange, and he currently serves on the board of the CMT Association. But above all that, he's been a friend and mentor of mine for years, so I promise you won't want to miss this one. But before we talk to Jay, it's Friday, the markets are closed, so let's take a quick look at how this week played out. All right, so it was a 4-day week with the holiday on Monday. The NASDAQ was the only major index to close higher on the week, gaining a little over 0.5%. The Dow lagged, dropping about 2.7% on the week. Now, the S&P 500 had a nice rebound on Friday, but still closed the week lower by a little more than 0.5%, marking its first down week of the new year. Now, all eyes are on that 200-day moving average and the downtrend line from the peak. We got rejected there earlier in the week, but managed to close a hair above it today. Now, as you can see, we're kind of working our way into a tight coil or triangle pattern with rising support and falling resistance. So the potential is building for a strong move in either direction. And we should see price resolve out of this pattern in the next week or two as we get closer and closer to the apex of that pattern. But we're going to talk about that pattern a little bit more with our guest, Jay. So without further ado, let's welcome him onto the show. All right, Jay, welcome to the show. It's great to have you on.
Well, Patrick, it's great to be here. I've seen your show a few times, and I'm honored that you invited me on.
Yeah, I can't think of a better way to kick off the new year, new season of the show. And it's the least I could do for all the times you've brought me down to the exchange.
Yeah, I remember when you were a young, up-and-coming CMT, and I brought you down here. What was the big stock that day? I think you got a hat, and you got to see the big, I don't know if it was an IPO. What was it?
It was the Eventbrite IPO.
All right.
We can pull up a chart of that. It obviously didn't quite perform, but it was still so exciting. I mean, you introduced me to Jim Cramer. That was cool. Yep. I got to see the Buttonwood Agreement. Actually, do you want to explain what the Buttonwood Agreement is?
The Buttonwood Agreement, that's our Constitution, our Declaration of Independence, if you will. It's our founding document. It's in parchment, and it's behind this, we'll say it's bulletproof glass. No one's proved me wrong, so I'll say it's behind bulletproof glass up on the 7th floor here on display for any visitor to come and see. And it's basically the document that founded this institution. 24 traders trading under what was called the Buttonwood tree. Why did they call it the Buttonwood tree? Because the wood, the bark on that tree was used to make buttons. Guess that was a hot commodity back in 1792. And if you're an arborist, it's a sycamore. So if any of those arborist fans of yours calling it a Buttonwood tree, it was a sycamore tree. And they traded, they didn't trade stocks, they traded commodities, because back in 1792, there were no publicly traded companies. And there were 24 gentlemen who got together and they traded commodities, corn, wheat, tobacco, sugar, on behalf of a public that was very interested in the price fluctuation given seasonality of these, crops. And these 24 gentlemen came together and said, hey, listen, anyone who wants to trade these commodities has to do so through us. We'll form our own group, an exchange, if you will, because they're exchanging goods, and they'll have to pay a flat commission fee to us. So the 24 gentlemen that signed the Buttonwood Agreement laid the foundation for the New York Stock Exchange. Now, in 1801, that foundation changed to stocks. Alexander Hamilton, buried just right up the street here at Trinity Church, he founded the Bank of New York. In order to raise capital for Bank of New York, he took them public via an IPO. So Alexander Hamilton, first Secretary of the Treasury. A lot of history here in Lower Manhattan. So I'm glad I get to sit here and talk to you from, the World Capital of Finance, the New York Stock Exchange, as we do this. And that Buttonwood Agreement, it is our founding document and the basis of what we do now. Now, flat commission fee, that was kind of cut into pieces. Thank you, Muriel Siebert, when she formed the first discount brokerage, Siebert Co., back in the 80s, early 80s. And now we're basically allowing retail investors to trade for free. So the basis of that document is no longer intact, but it was the formation of the New York Stock Exchange.
Yeah, and it was kind of a symbol of American capitalism as we know it. But as cool as the Buttonwood Agreement was and seeing that in person, I think my favorite part of the stock exchange was that Fabergé egg that they have there. And real quick, I'll tell the story. And I always call it the most expensive piece of art on earth because it was given, I'm, double check me on this, but it was given
it's going well so far. Go ahead. I want to hear if you remember the knowledge I dropped on you.
The New York Stock Exchange by Tsar Nicholas II, I think, from Russia.
You are on your game.
In exchange for a $1 billion bond offering, they did for Russia. And of course, then World War I happened. They stopped paying their interest payments to the United States. And so we just kept the egg. And here this thing is sitting in the New York Stock Exchange, untouched. You can go up to it and touch it. No, security around it. But I just think it's fascinating. It's the largest Fabergé egg in the world, largest one he ever did. And I think if the story is correct, Gorbachev asked Reagan for the egg back in the 80s. And he said, yeah, you can have it back. Just give us that $1 billion and all that interest you owe us. So
yes, it was Gorbachev and Reagan rang the bell here May 17th, 1992 for our 200th anniversary. And it was, a month before I started. So I missed that. I was still partying after graduation in college. Took a few weeks before I started down here. Unfortunately, if I just started, I would have gotten to see that historic event. But up in our, the boardroom is that Fabergé urn egg. And, Gorbachev knew exactly what it was. This is Russian. He goes, it belongs in Russia. I want it back. And they say, as soon as you pay off the debt owed and interest, then you can have it. So it's our multi-billion-dollar egg that sits here at the New York Stock Exchange.
Yeah, I don't even want to calculate what interest on $1 billion loan
is. Now it was multi-million-dollar loan, and now the interest is over $1 billion. It wasn't $1 billion when they made it, but I liked your story better. So we're going to let you keep your version of it.
Yeah. We'll stick with it. Yeah. So listen, you mentioned a little bit about your background already, but why don't you tell us a little bit more about how you got into markets and technical analysis in the first place and how you wound up at the floor?
Yeah, I mean, it's a crazy story. It doesn't all go in total sync, but I'm a big component of learn by doing, meaning as a father, get your kid a share of stock and watch their reaction so they follow it. And when I was 8 years old, I was blessed that I had an uncle who was in the business, Ralph Acampora, who is the founder of the CMT Association. And the godfather of technical analysis. Well, he's my godfather. So does that make me technical analysis? I have no idea. But he bought me 2 shares of IBM, he and my Aunt Marge, for my first communion. And, it was great. And he did it under one condition. You're going to, chart this on a weekly basis, high, low, close. High, low, close, simple bar charts. So I did this for 2 months and, I was in Philadelphia. He lived back up in the Bronx and then he came down and visited and I'm like, he wants to see my chart. I'm like, yeah, what is it? What am I doing here? And I was all confused and he took a pencil and he connected the lows across the bottom of the page. And he goes, what direction is it going? I go, it's going up. He goes, that's an uptrend. And that was my first foray into technical analysis. I just knew I was getting a 30-cent dividend every quarter and the stock was going up. A year later, he took me as a 9-year-old with that chart to the New York Stock Exchange, and I got to go into the IBM crowd and show the IBM specialist at the time my chart. And he pulled out his
still Open Outcry, right?
Oh, Open Outcry. It was Open Outcry until the early 2000s. So I was here for that, and I was a big part of that yelling and screaming. And I got to show my chart to the specialist, and he looks over, he whips out his chart, and he goes, "Which way is it going?" I go, "It's going up," and he goes, "Buy them." And it was a scene that you don't forget. It puts an impression on a young boy. Fast forward years later, I went to college. That experience was a little in the rearview mirror. I thought I was going to go to law school, but I got an internship, which he, helped open the door for. And it was on a trading desk on a NASDAQ operation called Sherwood Securities. And they were great to me. And this is what I taught to a lot of financial students down here at the New York Stock Exchange. I talked to a lot of young CMTs like yourself. That experience as an internship opened my eyes, because when you go into a field that you're not sure of where you think you may want to, that internship's going to tell you one of two things: whether you like it and it's for you, or whether you don't, and that's okay. And I went onto this trading desk, and this was like, people talk about movies. This was 1987 Wall Street. This was, yelling and screaming across a crowded desk, Charlie Sheen walking out in handcuffs, minus that part of the scene. That's what it looked like. Everyone in their suits yelling and screaming, and it was euphoric. I had a mentor there who answered what I thought were stupid questions. Anyone young watching this, aspiring to get into trading, CMT, try to find someone you can talk to, whether it's on social media, which is the way I talk to a lot of people now, or if you get FaceTime with them and ask them what you think may be stupid questions. Like, to me, what's a bid? What's an ask? Why is it green? Oh, green is up, red is down. You got to learn sometime, somewhere. And those were stupid questions in hindsight, but I didn't ask them more than once. Stupid questions is asking the same question more than once, in my opinion. And that internship opened the door. My mentors there said they're hiring on the New York floor. This was 1992, just coming out of a recession, and we may talk about recessions later, who knows, but they started hiring again, and I was blessed enough to join a firm called Spear, Leeds and Kellogg, and that great team there, and talk about mentors and leaders and the right group of people. It was a perfect fit, and then they taught me how to trade. They taught me a lot of great life lessons. I mean, more life lessons on this floor than any place in the world. Your word is your bond. You're a bunch of characters, and everyone had character as well. So it was a great experience. So that's the nutshell version. I hope I didn't go over too long.
No. I mean, listen, we could sit here and listen to your stories forever. But and hey, we're very glad you didn't go to law school and you wound up where you are. But let me ask you this: you've had the opportunity to meet so many celebrities and famous people down on the floor. What were some of the most memorable, or who were some of the most memorable?
I know you went through my Instagram, and it's a little obnoxious with some of the photos there, but before Instagram, there was a world before Instagram. I don't know if you young people know that. I was just talking to some of the older timers down here, me being one of them, some of the great celebrities. Hank Aaron. I handed Hank Aaron a water when he was inundated with guests. I met Reggie Jackson. I've met Dr. J, some of my heroes, although Dr. J kind of ticked me off, but that's another story for another time. His handlers ticked me off. Joe DiMaggio, my God, shaking his hand. Pele, who just passed away. Muhammad Ali. Those would be the greats. My personal experience, Kobe Bryant. And this is definitely on my Instagram. We were told not to talk to Kobe when he came down here. And, so we left him alone. But I have some friends in the building, and they said, stand over here. He's coming in the back. And there's a special entrance if you want to ring the bell, not go through the crowd. And they brought Kobe that way, but I know where to stand. And I'm like, all right, yeah, one thing to say to Kobe Bryant, what are you going to say? And I'm a big Philadelphian. I'm an Eagle fan. Kobe, exact same way. He walked by, I said, go Birds. He stopped. He shook my hand, said, go Birds, smiled, and walked away. So that little 2 words went a long way with Mr. Bryant, and may he rest in peace. That was one of the cooler experiences. And then if you go through my Instagram, you can find Weird Al Yankovic, Steve Gutenberg, who I now call a friend, Howie Mandel. The list goes on. It's kind of obnoxious, but they come here. And the Masters champion always comes here. Unless your name is Tiger Woods, then you won't come and ring the bell. But Phil Mickelson,
Tiger doesn't
not
come?
only Tiger, he came to the floor once, and it was like he was walking through the golf crowd, and Duff, his caddy, wasn't here with him at the time, but everyone just separated. He wouldn't look anyone in the eye. He was all business. That's fine. Everyone has their own thing. But Phil Mickelson, the exact opposite. He just won the Masters. He's talking to us. I want a stock tip. What are you guys buying? What do you like? It was a whole different world. And then if you hear Phil Mickelson stories, kind of makes sense that he was asking for stock tips. But this place is iconic for so many reasons, and that's just yet another one. All the celebrities that come through here.
Well, listen, we could sit here and recant stories for a while, but let's dive right into the market stuff. We're recording this on Thursday, January 19th. Yeah. So the week isn't quite over. We're down a little bit on the week, but I know you're pretty in tune with the day-to-day price action. I mean, you're right in the heart of it. So with that said, what are you watching on the S&P 500 in terms of levels or indicators?
Yeah, everyone's talking S&P 500 and that 200-day moving average. You punch up a weekly chart and you look at that downtrend still intact. I mean, we're testing it more and more frequently. We made higher lows off that October 13th low. So there are a lot of positives in place. We're starting to coil a little bit, and the hope is that we can finally break through. But the talk of the floor is, Fed based. That's not really technical, but we react to certain things. So when when Jerome Powell speaks, you're going to see, okay, where is he speaking? Oh, crap, he's speaking right in that coil. And that could be the catalyst that moves us up and out of this downtrend, or it takes us on that next leg lower. Everyone talks recession, and we all know the stat. Everyone that follows this very closely, every recession since 1950, either 9 of them as it's happened or the 10th after the recession was over, has made a new low. So if we officially hit that recessionary level, if the National Bureau of Economic Research says we're in a recession, watch the jobs number for that, watch the unemployment number. Once that ticks up, the lagging indicator it is, they may officially call what we've lived through, what we're living through now, a recession. That low not only will be tested, but will be breached. So we are at a very interesting inflection point. My feeling is we're in another bear market rally, that we have reached the last leg up. We had our little nice, first 5 days, January, the Santa Claus rally was positive, not by much. The one thing that I take pause in, the seasonal factors have been great. We had a great Q4. Dow Jones Industrial Average continues to lead, but there's too much big high growth tech that is driving the S&P 500 that will probably cause it to lag, not as much as say the NASDAQ 100, but it's got some work to do. And I think we're not out of the woods just yet.
Yeah, I mean, it seems like we're all watching the same movie. Everybody's eyes are on that 200-day moving average and the downtrend line. We got rejected there for something like the 6th touch or something.
Yeah.
But let me ask you about this in terms of the trend line. Each touch validates the trend line. Would you argue that if we ever do break out, the more times we touch it, kind of the more significant a breakout is? The bigger the implications of a breakout?
Without a doubt, the more often the level is tested to the upside or to the downside, the more likely is you're chipping away at that overhead supply if you're trying to buy it and go above it, or the buyers are just going to finally get exhausted and you're going to break down below it. So this is positive action. And let's do the inverse. Let's go back a year, just to 2021. We rode the 50-day moving average. We tested that 8 times on the way up. Boom, 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 boom. And it held every single time. So it was a buy the dip. This is still a sell the rip. There are a few dips that were very interesting that we saw. The early theme of 2023 is that rotation into the crap, pardon my language, but you're seeing stocks like the Cathie Wood names, like the most beaten down names have rip your face off rallies that have been completely oversold. We're going to talk about Tesla in a little bit. Their earnings are next week, but we just had an amazing rally in Tesla, but it was the most oversold I've ever seen. It was down 66% in 3.5 months. The whole fourth quarter was a disaster. The RSI was at the lowest level I've ever seen, the RSI in Tesla. It was a record. I think it just got down to above 15. So a snapback rally in some of these beaten down names has been the first few weeks theme. And now we got to see. And a stock like Microsoft is an interesting stock to watch. We'll talk about that in a second as well. We haven't seen new lows, but, let's just see if this was a little rally off the bottom and in a bear market or something has changed. And to me, in a lot of these high growth names, nothing's changed. I would avoid big tech. I would use these rallies to lighten up and wait for a better entry point.
I see. And you kind of stole my next question there, but
sorry.
here we are 3 weeks into the new year. And I was wondering, what are those big trends and themes that stand out to you so far in these first 3 weeks?
Yeah, there are a couple themes right now. I mean, obviously we had the early momentum rally in some of the beaten down names. We're seeing a rotation. One sector that's really kind of irked me a little bit because I thought it would be a stronger sector out of the gates is healthcare. UNH broke down. That is the biggest component in the Dow. While other components in the UNH, in the XLK, the healthcare sector, XLV. Geez, I'm all over the place. The XLV, the healthcare sector are not following through the way I'd like to. And the biggest winners were last year's biggest losers. Energy's its own little animal. It's holding pat. So congratulations to Energy for not giving back much of those gains. But you're seeing the laggards were last year's winners, the staples, the utilities. And, I don't think that pattern will continue, but that's the early theme we're seeing. Another key theme is not as much technical as it is fundamental. But we just came out of one of the most euphoric times. 2021 was a record year for IPOs. 2022 was the worst year for IPOs.
Yeah, you hardly hear about IPOs anymore. I can't remember the last time I heard of an IPO.
Well, maybe you need to come down because it seems like when you're here, IPOs seem to happen.
Well, hey, we'll be there for in what, April, for the 50th CMT?
April 27th. Yeah, April 27th is the 50th. Anniversary gala. Yeah, it's going to be a tough ticket to get. So if you can get it now, I would highly recommend it. And then forget the bring a guest part of it. That's another hurdle that we're going to work through, but we're going to make it work and everyone's going to have a good time.
But anyway, I interrupted you on the IPO thing. You were talking about.
No, you didn't interrupt. We got to plug the CMT Association. What's wrong with that? But
I had to.
I know. But no, what we've seen are a lot of companies that went public now that are just getting beaten down. And I think the next theme is going to be in M&A. You're going to have a lot of these, SPACs that went public that just mistimed things. Big companies that really do have a good story, but have been swept up with the downdraft, as you see in a lot of these Cathy Wood names in the ARK funds, the ARKK funds. And you may see a bigger name with a strong balance sheet, an Amazon and Apple, scoop up some of these young hot techs. You may see it in the fintech space. You may see a Goldman or a Morgan or a JP Morgan, look for ways to branch out and get some of these firms that went public but mistimed it and get them on the cheap. So I think that is one of the themes you're going to see. We've seen a lot of biotech mergers over the last few months, and I think that will continue into some of the recent IPOs, stocks that went public in the last 2 years that are struggling on their own and may need a suitor to really tell their story a little bit better.
Yeah, interesting. I mean, like I said, I almost forgot about the IPO market, so I'm very glad you brought it up. But before you go, here we are in the midst of earnings season, and next week we have a couple big ones. Microsoft, Tesla, Visa, and MasterCard are reporting. I think those are some of the big ones. There's plenty of others, but let's focus on those. So yeah, why don't you break it down for us, and we'll try to stick to technicals and avoid the fundamentals.
All right, that sounds good. I was on on one of these Twitter Spaces, and I was with a bunch of fundamentalists going through earnings season last night, and then they came to me, and I go, you're talking to a technician. I only care about price. Price is what pays. Price is the only thing that matters. And there are a lot of stocks right now as you go into earnings season. One, as a trader, I never had a position going into earnings. I'll react to the price movement. I will not try to predict the price movement. I've done that a few times where you can see like a Netflix, which just reported after hours here today, where it was building up and something was changing. And, you could sense that the price action was telling you they're about to report good numbers. But if you look at a Tesla, like I said, down 66% over 3.5, 4 months. We had an RSI below 16, meaning it was extremely oversold. Below 30 is an extreme oversold measure in the RSI. Doesn't mean it can't go lower. In the case of Tesla, it did. But when you have these big moves, you're going to have what we call rip your face off rally. So if you can time it right and you can catch within 5 points of the bottom, you're going to have a nice gain in it. And if you look at the chart of Tesla, it has a lot to reverse and still stay in that downtrend. So it could have a solid quarter and rally 10%. I mean, we're almost 90% below the 200-day moving average in Tesla. That's insane. It practically has to double to get to its 200-day moving average. That's how oversold it was. So I would not play this for earnings, but I think you have, as you show on your chart, some key levels of interest. And you're using anchored VWAP, which I am a big proponent of. Brian Shannon, shout out to you and your work. In fact, Brian Shannon's got to be a guest. He's got a book coming out soon talking about just this topic.
We're going to try to get him back. I know we have to.
That's my guy. That's my guy. But
so how about Microsoft?
Microsoft, well, once again, it's stock in a downtrend. Microsoft has, basically it's a perfect downtrend going back to November of 2021. That peaked at 334. It is only spent during this downtrend 8 days, 8 closing days above its 200-day moving average. So once again, it's not the line in the sand, but it's a pretty good layer of interest if you're looking for an area to lighten up if it gets there. Right now, it's not even, it's struggling to stay above the 50-day moving average. In fact, it got there and it failed. Coming into earnings, you want to set some key restrictive areas in. You want to look at the recent lows. You don't want to see it make a new low. The one positive out of Microsoft is the last leg down was a higher leg higher, much like the S&P 500. In fact, it has that same narrower coiling range as the S&P 500 does, but it still has a little more room to go to the upside before you hit that resistance. Microsoft, to me, is still a no touch. It still has not even retested its pre-COVID highs. Pre-COVID highs are a key level. You want to talk about Tesla pre-COVID high, we're talking $63. Microsoft, it's another $50 to the downside, 165-ish. So these are stocks that when you go into them, I wouldn't go in with a position on the earnings. I would see how they react. And if it rallies, I'd probably put some out and short it until proven wrong. You will have at least a line in the sand with those moving averages that you can set your stops to accordingly and limit your losses. And as you and I know, and any trader, any CMT knows, the key to trading is risk management. You're not going to be right every time. You're not going to be right, 55% of the time. If you're right, that's fine, as long as you're limited in your losses the other 45% of the time. So I think these stocks that we mentioned, while in downtrends, they're not stocks I would just jump into and buy ahead of earnings. I'll wait to see how price action resolves itself and then get involved with strict parameters in place. Now, you did mention one positive stock. You talk Tesla, Microsoft downtrends. All right. A lot of people have this strict rule: do not trade stocks in, bleeping downtrends. That is a Brian Shannon as well, as a matter of fact.
It's a great rule of thumb.
Well, it is for the long-term investor, no doubt about it. If you want to buy stock for the long term, it's in a downtrend. Something changes. I remember having my mother in Facebook back in the day, and it had like an 8-year uptrend. It broke it. Mom, you're out. That's it.
Well, you know what?
Jay,
it reminds me of that Walter Deemer quote where no stock in an uptrend has ever gone bankrupt. And then you always get those wise asses who say, well, what about Enron and all that? And the point is those stocks entered into downtrends before they went bankrupt, right?
Exactly. And you can say the same thing about Tesla. There are a lot of people that made so much money in Tesla, but if they're still holding without taking any of those profits, well, something's changed. And I don't want to be in that name right now because that longer term uptrend has broken. And if you're using that to manage your risk reward, you got out, and I'm looking at it now at like $260. It trades as low as 101. You saved yourself a lot of pain. Now, you're not going to pick the bottom. You're not going to pick the top. Technical analysis doesn't do that for you, but it gives you that guideline to maximize your profit and minimize your loss. And that's all you could want. So let's talk about a good stock. And when I say good, it's Visa. Visa is,
and hey, so Visa and MasterCard, which I mean, I haven't looked at the correlation in a while, but they used to look exactly alike for obvious reasons. But I just think it's so funny that those two are some of the bigger components in XLK. Obviously, the XLK is like
technology,
Apple and but they are in there, and I wouldn't think of Visa and MasterCard as a tech company. Would you?
Well, they like to think of themselves as fintech, up and coming fintech, but it is weird. I don't know who comes up with these indices, how they do it, what the difference between one staple versus a discretionary. Some people would say Starbucks is a staple. I need my coffee every day. Other people say, no, it's a discretionary because
that sounds like a decent argument to me.
Yeah. I mean, but I'm not going to argue it's in this index, and so be it. But if you're looking for strength within the index, it broke its Visa. This is broken a major downtrend. Now, this isn't exciting. People don't get excited about Visa. They want to talk about the FANG stocks. They want to talk about that ticker that's hot, that's, you know, the meme of the day that's going underneath. But if you look at a stock over the long term that has fared relatively well, the downside hasn't been too dramatic to the downside. It does act more along lines with the market, but something has changed. We had a peak. We're about to make a 52-week high as the calendar gets closer to February 1st. That was the ultimate peak you see here in 2022. Well, that's only, what, 17 points higher than where we are? And then on February 2nd, we're a little closer, February 3rd. The calendar is starting to erase the old highs, and now we're seeing moving averages start to trend up. Stocks start to trend up when you're looking at the yearly. That's why you got to back it out. But even when you back this out, look at what it's done. It's broken its near-term downtrend, going back from mid-2021 to the lows right before the new year. It finally got above that moving average, which, as you see in your chart, it got there, it's tried, it failed. It got there, tried, it failed. How many times did it test it? And now it broke above. And guess what happened when it broke above? It tested it to the downside from up to down, and it held. So that resistance level has become support. To me, this is an attractive chart. And now you have your sector, you have your risk in place. All right, as long as it's trending above that moving average, I want to be long the stock. Guess what? If it's done, I cut my losses and we move on. We go to something else. But, you know, you have your guide in place. And to me, the trend has changed. And it may be a place to put your money. And slowly but surely, it'll be making new highs in no time.
Yeah, no, and you're right. I mean, this one is definitely showing higher highs and higher lows. So that's not a downtrend. But listen, I think we got to wrap it up now. Thank you so much for coming on. This was awesome, and we'll have to have you on again.
Yeah, Patrick, anytime. You're doing good work. Your team does great work. And, you know, I'm honored that you asked me to come on. And, you know, maybe next time we do it live from the floor of the New York Stock Exchange and we can talk right where the action is. That would be fun.
I like the sounds of that. And hopefully I get a chance to see you before that 50th CMT anniversary, which I'm very much looking forward to. That's going to be great.
Sounds good. It's going to be a good time. All right. Thank you.
Have a great weekend, Jay.
All right.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.